It is almost 11 a.m. in Singapore and Shanghai. Welcome to Bloomberg Markets Asia. I'm Haslinda Amin. Here are the top stories. Asian stocks mirror declines on Wall Street due to rising bond yields. The yen falling through a level that prompted the last round of suspected intervention. Votes are being counted in South Africa's most closely fought election since the African National Congress came to power 30 years ago. We'll have the latest from the ground. Plus, temperatures in India's capital hitting a record 52 degrees Celsius, stoking demand for electricity. We speak to one of the country's biggest gas distributors about whether the heat wave will affect prices. Well, let's get you to markets. Avril Hung on top of developments in Avril. You know what? Global rout continuing, stocks, bonds falling in tandem, and I say it is about time for a correction.
Well, we are seeing a bit of that coming through today, Haz, and the stocks, as you say, are really coming under pressure along with bonds and currencies. I mean, this is against the backdrop of those higher US yields after yet another soft treasury auction. But as one of our MLive colleagues have been pointing out, it's not just that, it's a bit of a triple whammy for the Asia Pacific, the weak Japanese currency and the weak Chinese currency. We're seeing the Korean won leading declines in the region. The Nikkei has also been under pressure. I think it's the biggest decliner in the Asia Pacific today amid those higher yields in Japan, kind of sapping the appetite for those growth names, but higher yields in Japan not helping the Japanese currency. We're still seeing it above the 157 level, the level to watch 157.52. It actually breached that earlier on at 157.7, slight recovery towards the 157 level now. Now, dollar China also in focus. We're seeing the onshore rate hovering at around 725, while the offshore is around 727. Let's flip the board because we are seeing the onshore rate hovering closer to the upper limit of that trading band, the 2% limit, and it's approaching this level. So that prompted some expectation that we could see potentially a stronger fix today. That's not what we got. Second straight day where we got the fix, the weakest since January. So the PBOC letting the currency weaken. But as some analysts have pointed out, it's not that the PBOC is letting the currency go. It's more about accounting for greater demand of foreign FX. That's what we're looking at for now, Haas.
All right, Avril Hong, thank you so much for that. Let's dig deeper into markets. Bring in Bloomberg Intelligence Chief Asia FX and Rate Strategist Stephen Chu and MLive Executive Editor Mark Cudmore. Mark, let's start with you. The overall sentiment in the market in the negative, and that's partly due to that disappointing 7-year auction. And you know what? You can't help but feel that these auctions are having greater sway in markets nowadays.
Yeah, I think that's fair, hasn't it? I mean, look, at the start of this week, I was kind of saying, look, there's a massive auction schedule this week. How much do we care? And I'll admit that most of my team were like, nah, not really a big issue. You know, it's bigger about PC later in the week, non-farm payrolls next week. Then we got the fact the Fed coming up, that kind of dot plot, the new projections. So they're the kind of bigger issues. But it was interesting. We dismissed it because we said, look, the backdrop picture is we think yields are going to continue to go higher. And it is this idea that global yields, and particularly US yields, have more to go. We've talked about this a lot, Haslinda. The idea that there's still rate cuts priced in the US does not seem to make much sense. The base case should be no move either way, but hikes need to be at least a possibility on the horizon. And until we get more into that narrative, yields still have higher to go.
Rates. Yields tend to go higher, expected to go higher. How high can they go? And you know what? It's not just in the US, it's elsewhere in the world as well.
Yeah, look, I think it's a global theme. I think that, you know, we have not had the recessions around the world to control the inflation we let get out of control. So until we do that, services inflation will stay sticky. And now we're also seeing the volatile goods component of inflation also kind of reinflate via commodities, via shipping dynamics. So look, the inflation narrative is not under control. So central banks can either tolerate higher inflation, which is more dangerous down the line, and that means that we just delay any recession, or they can get serious about it. I think in reality they're going to try to ignoring inflation until they're suddenly forced to get serious about it at some point in the future. But the backdrop is yields probably need to keep on going higher.
All right, Stephen, let's get you into this conversation. It is about FX, it is about the yen, about the yuan. Let's start with the yen. When will intervention come in? They say 160 is the level we're looking at right now. I mean, it's already breached that level that prompted that suspected intervention the last time.
I mean, like, interestingly or boringly, now it's very similar to a year ago. It's still about higher U.S. yields, higher for longer. I mean, like, even if you get one cut or two cuts in the second half of the year, it doesn't mean that the Fed will just keep cutting. Probably that's it. So higher for longer will probably stay for longer, if that makes sense. So that's why the broad dollar resilience, at least if not stronger, is going to stay. And hence, Asian currencies, every single one of them, except probably Singapore and Hong Kong, will remain under pressure. So for now, obviously, market has come a little bit after that suspected BOJ intervention. But you can see that basically rate differential is still huge, whether it's US Japan and US China as well. So that's why you see dollar yen slowly crawling back towards 160. Now, of course, if the June FOMC doesn't provide anything, any hint of a fast cut early on in the second half of the year, then probably that could be a trigger for dollar yen back to 160. And it will be very interesting to see what the Bank of Japan will do.
Stephen, that's specifically about dollar yen. I'm curious about your views, the idea that let's just take out the dollar component. Do you think in a world where the Fed, maybe they start cutting rates, maybe the dollar turns lower, how does yen do on the crosses? Do you think that yen will still be higher beta to Fed rate cuts, or will it continue suffering on the crosses against other Asian currencies, even in a world where the Fed is cutting rates?
I mean, it's still a rate differential story. So if we look at yen crosses, it's going to be like Japanese yields versus the rest of the world. Now, the thing is, yes, Japan has started hiking rates. They may even hike another 40 bips according to our economist forecast. But 40 bips in this world, it's basically so little. It depends on whether the other major currency is talking about. If you say euro, the ECB, or the pound, the BOE, whether they cut fast enough relative to the yen, of course. Say if the ECB really cuts in June and cuts further, then yes, for Euro yen, probably the yen could perform better. But still, like if against other higher yielders, let's say the dollar, then of course it's still going to be under pressure.
Stephen, we keep waiting for the BOJ to do something about the yen. The thing is, it's getting even more difficult for the BOJ to take action. We heard from Yellen saying, you know what, that shouldn't be the first port of call in terms of supporting the currency. And we had G7 finance ministers also saying they're not tinkering with the FX movement. So where does it leave the BOJ?
I mean, it's very interesting. If you look at the recent comments, whether from BOJ officials or like from the Ministry of Finance, they've been admitting like quite explicitly that a weaker yen is basically causing problem for import inflation. Now, that means in terms of monetary policy, it's possible that they may want to hike earlier and probably slightly faster, but it's still the Japan that we're talking about. So even though if they can hike earlier and faster, it's not going to be really fast. We're still talking about below half a percentage point. Now, at first, they may help the yen a little bit upon the announcement, but still, at the end of the day, when market look at the broad rate differential against the U.S., against the other major central banks, it's still very low. We're still talking about half a percentage point policy rate in Japan, even if they hike. So that's not going to be enough for the Bank of Japan to support the yen. So we expect if that continues, then intervention may have to come back again.
And Mark, you raised your eyebrow when I said that it is time for a correction in the market. I mean, look, 23 of the past 30 weeks have seen an increase in the S&P going straight up. It is time for a correction, isn't it?
You're right, Haslin. Look, you know what? I'm just disappointed by this TV hit today, and I'm going to tell you why. First of all, I agree with everything Stephen says, which is no fun. I want to have a bloody argument with him, and I completely agree with him. He's absolutely right on everything he said in the end, the BOJ. So that's ruined one part of the fun. And the other part of the fun is, you know what? My most succinct, clear markets view today, I'm stealing from you. In the break, when you said we've had 5 weeks, we're due a consolidation, it's nothing more than that. You're right. Let's not be too dramatic. We're due a bit of this consolidation. Overall, the bull market will go on. Maybe it'll take a couple of weeks to this consolidation, but it's nothing dramatic. We're due it. You're right.
But isn't there a key event to be looking out for? NVIDIA stock split, for instance. Some say that may move market, that may impact sentiment.
Sure, but why is that going to like change the overall narrative? Like, you know, that's going to cause some short-term volatility.
This is one stock that's been driving the market sentiment.
But like, you're right, and maybe that's going to be the catalyst for some technical reason. But I just don't see that changing the narrative. NVIDIA's earnings were not only good, but their forecasts were good. And from the micro level, the AI bubble, and I do think it's a bubble, is not ready to implode yet. I do think that'll be challenged at some point in the future. But we've got at least another few months to the next earnings cycle to challenge it again. So I think overall the bull market has another few months in it. Does that mean that this consolidation can't last a couple of weeks? No, of course it can last a couple of weeks, but the backdrop's still good, and I think dips will ultimately be bought in this consolidation period.
All right, hang tight with that. Before we go, Stephen, just your thoughts on Asian currencies. We talk about higher yields right now. How might that impact the rest of the Asian currencies?
It's kind of pretty much the same theme as like over the last year. So in Asia, the higher yielders may be more resilient against the dollar. So again, namely Philippines, Indonesia, and India. I mean, especially in the case of Philippines and India, it's very interesting because their currencies against the dollar are approaching record lows again. So you can see like more forceful wordings from the BSP, from the RBI, and they may actually act upon it if the currency continues to weaken. So these high yielders plus the intervention risk will actually support these currencies. But for the rest of Asia, the low yielders, talking about Thai baht, South Korean won, and Taiwan dollar, could be hurt more if the higher yield US dollar strength story continues.
I hate to say it, same old, same old. Bloomberg Intelligence Chief Asia Affix and Rate Strategist Stephen Chu and MLive Executive Editor Mark Cudmore. Very animated today. Well, still ahead this hour, our exclusive interview with Indian gas and LPG distributor Indraprastha Gas. We discussed their business outlook amid heat waves and a new EV adoption policy. But first, early results are in for South Africa's most unpredictable election in 30 years. We'll tell you who's leading. That's coming right up. This is Bloomberg. Welcome back. Ballot counts are underway in South Africa after a contentious national election. The ruling African National Congress is at risk of losing its parliamentary majority for the first time since taking power in 1994. For the latest, let's get to our senior Africa reporter, Anthony Squazin in Johannesburg. Anthony, we know it's still too early to make a call, but what do we know so far? How's counting going right now?
Very, very slowly. So far, we've only had 0.8% of the votes announced. The ANC is ahead with 53% of the votes so far, with the main opposition party, the Democratic Alliance, 22%, and everybody else a little bit below that. So there's a very long way to go.
What do we know about the turnout for this election? Because going into the election, apathy was actually one of the concerns out there, and they say that the higher the turnout, the more the ANC will benefit.
Well, we don't have any exact figures yet, but the Independent Electoral Commission has forecast that it will probably be about 66%, which is a lot higher than last time, where it was just under half the registered voters. So it's reversing a long-term trend in that more people have gone out to vote this time.
And talk to us about how the voters likely voted, because we know unemployment was a huge issue. Disillusionment about the lack of opportunities in the country, also an issue.
Yes, well, there are a host of issues. I think that a lot of people would have been upset by the problems getting jobs. There's a very high unemployment rate of 1/3 of people are jobless. That's an issue, but then also service delivery. Basically, there have been a lot of power cuts. Water supply is not what it used to be. It can be quite erratic. Passenger trains don't work very well, and the same would apply to freight trains and ports, all very inefficient and have been run into the ground over the last 5 to 10 years. So while the government has come up with a lot of long-term plans to improve those, it's going to take a long time to see any real difference, and I think people are very frustrated. So I think that may have been quite a big impetus to getting people out and into the voting stations to cast their ballots.
Anthony, thank you for the update. Senior Africa reporter Anthony Squazin in Johannesburg. And of course, you can turn to your Bloomberg. For more on this, go to TLive Go to get commentary as well as analysis from Bloomberg's expert editors. And here are More geopolitical stories we're tracking for you. Israel's national security advisor says the defeat of Hamas probably won't happen before the end of the year. His comments come as the U.S. says a fresh ceasefire deal has been offered in hopes of prompting additional negotiations between the two sides. Health officials in Hamas-run Gaza say more than 35,000 Palestinians have been killed since the war began. China is sending a new pair of pandas to Washington's National Zoo, reversing course after having taken back all the animals on loan to the U.S. The zoo says the pandas will stay through April 2034. In keeping with past agreements, the bears and any offspring will remain Chinese property. A previous set of pandas left Washington in November after disagreement on their stay. And the U.S. has again warned Beijing it will face consequences if Chinese companies continue supplying Russia with components for weapons used to attack Ukraine. Deputy Treasury Secretary Wally Adeyemo spoke to us on a visit to Kyiv, repeating that Washington is open to further sanctions.
The mood in the capital today is one of urgency in terms of doing everything they can to defend their country. And I've been impressed by the brave men and women here in Ukraine and the fact that they are committed to fighting for their freedom and doing everything they can to build an economy and to build a free and democratic country. And I'm here because the United States wants to be their partner in doing exactly that. And in addition to talking to them about sanctions, I've been able to talk to them about our economic support and the ways in which we can make sure that the United States and our allies and partners stands with the brave men and women of Ukraine.
You said just yesterday on your tour in Kyiv that an unacceptable amount of weapons components are still getting into Russia. There's a sentiment that sanctions are simply not working. As the Treasury's point man on sanctions, does your trip confirm that?
My trip confirms that we need to do more to make sure that our sanctions continue to stop Russia from being able to get the goods they need to build the weapons that they want. What we know is that the Kremlin has charged their intelligence services with trying to get around our sanctions, and we are concerned that Russia is getting access to key component parts, particularly from China and other countries, that are allowing them to build these weapons. And what I'm here to do in Kyiv is to talk to my counterparts about the new tools we're considering to try and go after the ability of the Kremlin to do just that. Fundamentally, we can't do this alone in the United States. We need to do it with our allies and partners, and that's why I'm heading from here to Germany to give a speech and talk to my German counterparts about the importance of us acting together to stop those components from getting to Russia.
Well, we're looking forward to that speech in Berlin. Will you announce secondary sanctions against those responsible for those components getting into Russian weapons?
So I'm not going to preview any actions that we're going to take, but what I will say is that I'm going to talk about the fact that the United States and our allies and partners are going to be open to sanctioning any company or individuals that provide material support to Russia's military industrialized complex, because we want to make sure that Russia doesn't have access to the goods they need to fight the war they want here in Ukraine.
And that was U.S. Deputy Treasury Secretary Wally Adeyemo speaking to Bloomberg's Joe Matthew. Well, plenty more ahead on the show, including the deal that fell through to do with BHP. It is walking away from its $49 billion bid for Anglo American. We discuss the alternative ways it could expand its copper business. That's coming up next. This is Bloomberg. Well, here's a look at how BHP is trading under pressure right now, down almost 2% after it decided against making a firm offer for Anglo American, walking away from what would have been the biggest mining deal in over a decade. Bloomberg's managing editor for energy and commodities in Asia, Clara Ferreira-Marquez, joins us now. Clara, I mean, this is a deal years in the making. The truth is, it is a complicated deal.
That's absolutely right. I mean, Anglo American has been the single biggest, most obvious mining prey for this sector. It really has the prized copper assets that everyone wants, but it also has a lot of businesses that people do not want, including apparently Anglo American itself, if to judge by its own self-help plan. What BHP tried to do is work around some of those complications with these this effort to get Anglo American to spin out some of its own South African businesses. In the end, it could not provide enough reassurance. Anglo wasn't willing to come to the table, and it all fell apart just an hour before the deadline last night.
$49 billion deal would have been the biggest deal in about 10 years. The thing is, how much value would it have created for shareholders? I mean, it's humongous.
It's very big, and yes, the industry has a very poor track record when it comes to big deals. If you look at both BHP and Rio, but also others in the sector, they typically come in at the peak of the cycle. In the decade ago, a lot of the deals were done in cash, just a series of disasters. I think this time they are coming at it in a very different way. If you look at how BHP has positioned itself, it's positioned itself as very much, it's in shares. They're also backing away as soon as it gets to the concessions get too significant for them. So I think shareholders, today you have seen the shares come off a bit. I think that's largely because this is what people were expecting. The mood music was pointing towards this. Certainly the shareholders that we have been speaking to say they're quite happy with how things have gone and the fact that BHP has managed to show some restraint.
The thing is, there is still some disappointment. The thing is, this deal would have secured copper supplies for BHP. What happens to that now? What are the options out there?
Well, that remains the target, right? BHP has now made it very, very public that that's what they want. That is also what the whole mining industry wants. So copper, very large copper mines are very difficult to find, very difficult to develop. They take 30 years even when you do find them. So Anglo American's Latin American assets are the jewel, the prize everyone wants. The question now for BHP is, if Anglo American stumbles, can they come back in 6 months' time and perhaps even get this more cheaply? Or do they simply progress with their own options to try and grow this copper production themselves? That would be much slower. Or are there other targets out there?
All right, Clara, thank you so much for that. Managing Editor for Energy and Commodities in Asia, Clara Ferreira Marquez. In the markets, we're keeping an eye on China property stocks in particular on the back of news from Logan. Of course, this is the Chinese developer Logan entering a crucial stage in its $8 billion offshore restructuring with just 3 months to pay or refinance a loan or risk losing control of a key luxury home project. Of course, we've heard that JP Morgan has been engaged to arrange a refinancing, and that's according to people familiar with the matter. Logan Group currently down almost 3%. Agile Property, Sunac China also under a lot of pressure. In fact, China Vanke down more than 5%. We're also keeping an eye on China chip stocks as well. That's on the back of Chinese memory chip stocks are rising as Samsung's union plans a strike. It plans to carry out an inaugural strike, by the way. China accounts for about 10 to 15% of Samsung's revenue. Take a look where we are in terms of some of those plays. Samsung Electronics down about 1.5%. We have Shanghai Baling Company currently lower or higher in the opposite direction, up by more than 10%. Well, we're coming up. We're live from the Asia Tech Summit here in Singapore, where industry leaders are gathering, along with our very own Annabelle Droulers. Bell, what's in store?
Thanks, Haz. Yeah, it's that really big focus that we're seeing, not just on AI, its capabilities, but also the pressure that tech is increasingly putting on energy grids as well. And we've just actually had Singapore's senior Minister of State, Janil Puthucheary, announcing a new green data centre roadmap for the city-states. We'll have more information on that ahead. A lot to discuss. This is Bloomberg.
Well, Welcome back. China markets just heading to lunch, and we have the CSI 300 index under pressure, down about 0.2%, pretty much in line with the rest of the region, which has been weighed down by the disappointing auction which we saw overnight in the U.S. Still, when it comes to Morgan Stanley, it says it is less bearish on China. In fact, it's been increasing its exposure to Chinese stocks on cautious optimism that share buybacks spurred by the government will help boost prices. Today, though, that's not showing up. CSI 300 index under pressure along with the other benchmarks. And in terms of the Chinese yuan, it is trading at 724.95 unchanged versus the USD PBOC fixing that currency pretty much weaker than anticipated, suggesting perhaps it is quite comfortable in having its currency weakening, perhaps a reflection of the economy. China heading to lunch, Japan coming from that lunch break. Avril Hong on top of developments. Avril.
Yeah, mainland markets off to lunch, but we still have the Hang Seng running, and I wanted to highlight what we're seeing on Chinese tech. The Hang Seng tech has been responsible in large part for the April rebound on the Hang Seng, don't forget, amid the earnings optimism initially. But we've actually seen it since the peak in May. It's down about 9% since then, so we are on watch for technical correction. It's quite a swift reversal of sentiment towards these Chinese tech names amid concerns about their profitability potentially taking a hit given the price war among them for AI offerings. Now, the other thing I wanted to highlight, let's take a look at what we're seeing on the Japanese yen. It has gone past the level which is thought to have last prompted intervention earlier this month. So our colleagues have been pointing out that 160 is the next level to watch. A bit of a recovery there towards the 157 level now. But even as the slide in the yen against the greenback loses momentum, they point out, our colleagues, that there is still the concerns about how it's faring against the euro, against the pound. Remember, it's about that yawning rate gap, and even though the BOJ is sounding hawkish, it's still not enough to overcome that gap. Flip the board again, because as the yen is in focus, it is the worst performing Asia currency this year. The Thai baht is second in line. Today, it's also coming up amid pressure with those higher US yields. Indonesian rupiah not doing that much better. The Sing dollar holding steady, Has.
Putting a lot of pressure on their respective central banks. Avril Hong, thank you so much for that. Now, Singapore has launched a green data center roadmap, which aims to chart a sustainable pathway for the continued growth of the facilities. Let's cross back to Annabelle at the Asia Tech X Singapore event. Belle.
Thanks, Haz. Yeah, we've got Janil Putticherry. He's here this morning, Singapore's Senior Minister of State, joining us for Ministry of State, rather for Communications and Information. But we can get started with this new roadmap because you're just hot off the press of announcing that, really. So what exactly is it?
Well, it's a series of pathways that we hope businesses can get on board, thinking through how they do their hardware efficiency, their software efficiency, and far more importantly, the kind of partnerships that we want to see between the data center operators and their clients and the energy providers. Because what we want is the increasing use of green energy for data centers. So this is a roadmap to that end. And in there, we lay out the 300 megawatt delta and the capacity that we can guarantee. I mean, this is resource allocation, movements around efficiency, and then a sense of ambition that we want to do much more. The industry players have come to us. They've got some ideas of the kind of partnerships that they can put together with energy providers, and they think there's at least another 200 megawatts of increase in capacity there. If we can do that, great. If we can do more, even better.
300 megawatts of additional power in the short term. Is that enough, do you think? Because, for instance, the World Bank was reporting that the amount of energy that's needed for AI tools is roughly doubling every 100 days. So that is a lot of extra power capacity that's needed. Is 300 megawatts enough to cover that, do you think?
Well, that's why we have to work on the efficiency side as well. We have to reduce the consumption and increase the efficiency. And we have to do so in every possible way, whether it's about the facility, the cooling, the humidity, whether it's about the actual IT, the servers and the racks, and changing it out so that it's best in class. And whether it's about the software, we have to find ways for the business model and the operating model to use software in the most efficient way possible, reduce the energy take as far as possible, and then maximize the benefit out of whatever capacity we can unlock. Whatever capacity we can unlock, ultimately we're constrained by energy and carbon, and we have to meet our 2030 CO2 peak commitments and our 2050 net zero commitments under Paris. And so we want to do both. We want to grow the data center space. We want to increase the utilization of AI-based tools, but we also want to make sure that we do so sustainably and meet our commitments.
How do you do that, though? I mean, how much extra efficiency can be squeezed out right now? And where are you also reallocating resources from? Because if you're giving more to data centers, who loses out in this scenario?
Well, we are working with industry. So this plan, we didn't just start working with the industry today. What we're publishing today and putting out is on the basis of very strong collaboration with industry partners about what is possible and what is necessary. So the amount that we're talking about, I mean, it's something like a 30 to 35% increase from where we are today. So it's not small. It's a significant gain. It will create opportunity. But from our perspective, the main thing it will do is engage in an exploratory and experimentation process about greening the space. If we can do as much of that as possible through green energy and through these partnerships, actually we shouldn't stop there. And so then the idea of, is it enough? Well, the market will show us, and it will show us how far we need to go.
But are you going to be increasing emissions then with this?
In the short term, any increase in energy is going to be associated with an increase in emissions. And that's the way it is if you're using fossil fuels. And that's why right up front, we have to reduce consumption, increase efficiency, and put that green energy component on the agenda. So we're telling the people who are the industry players that we're working with, who want to come to us and say, give us more capacity, we're saying, well, there has to be a green energy component to that proposal. That will inform our way forward, precisely because this is what we're worried about. But that increase in emissions, I mean, don't forget, AI is not all bad. We want to use it for good. We want to use it to deliver social good and for public good. And so we need to be able to engage in this space. And that means making the capacity available for increasing AI deployments.
But pretty much right now, all of Singapore's energy comes from fossil fuels.
Indeed, and that's why we have to work hard for the green energy transition.
But where does that green energy come from then? Because Singapore obviously has limited resources available, not just from a land constraint perspective.
Indeed, we are a resource-constrained island. We don't have natural resources in the way that many other cities and many other jurisdictions have. We're going to have to import energy. We already do. That's our situation today. If we do as much solar as we can, it might account for, I think, 3 to 5% of our total national needs. And so ultimately, we still have to import energy. What we can do, and what we will do, and we're intending to, is import green energy. Now, exactly what that mix is, how much of that is green electrons, how much of it is hydrogen, how much of it is ammonia, or some other mechanism or medium to bring in green energy, that's not yet settled. Because that's the hard part of the energy transition, working out what are the business models and operating models to get us through. The situation that we face in Singapore, we're all going to face eventually. We're just facing it earlier because of the situation that we're in geographically, the situation that we're in terms of our economic development, and being a small resource-constrained island. So we have to get started earlier, and we have to move faster.
So 300 is coming from, that's sort of a government guarantee. The 200 you're saying is coming in from green energy in particular. And is that the portion that comes from private sector investments then? No,
all of it will involve private sector investments. The 300 is what we're absolutely certain about, looking at what we have today. The 200 is on the basis of, these are the existing industry proposals. This is what they have come to us and said, look, here are some ideas that we have working together with the energy providers and other operators and businesses and their clients, and we think there's this demand and this ability to support that demand through green energy. So that's an indicative sense of how far we can go on the basis of today's thinking.
So more power though for data centers, so that's obviously positive. Do data centers get more space?
Well, they'll have to. I mean, although we do have a fair amount of experience with innovative architecture and engineering in Singapore around data centers and compute. If you visit our National Supercomputing Center, it's on the 16th floor of the building. And so we're land constrained. We find ways to make space available.
You did say you will give more space to data centers, so what are you thinking about there?
As in?
If you are planning to give further space to data centers, what's the amount of space that you provide?
We have not yet settled on that specific amount yet.
Okay, but could you give us an indication of the vicinity?
But no, not the specific location or the vicinity. But it's a 30 to 35% increase from where we are today. That's not just going to happen because we turn the temperature up in one data center or a handful of data centers, right? It's going to require the allocation of serious resources in order to do this, and that's what we are going to do.
We have seen Singapore, of course, there's that competition perhaps with others in the region. Johor really stands out because we have seen a lot of investment there from the likes of NVIDIA, for instance. There's a ByteDance-backed data center there as well. Are you seeing any sort of ground being lost?
The market is large. I mean, there's a lot of opportunity for everybody. We play today a regional role, and we play a role as a global hub. We support businesses throughout the region, just as businesses are also operating in Johor and various other places. So the market is large. There's plenty for everyone. The type of businesses and the type of operations that are located here are not necessarily the same as are located elsewhere. I think these are decisions that businesses will have to make. Most of the businesses that use these large centers and these tier 3 services that we have available in Singapore, 70% of our data centers are tier 3, they are not serving the Singapore market. They're serving a regional market, they're serving a global market. They have operations, including compute operations, in other jurisdictions as well. So this type of partnership, it's not a zero-sum game competition. It's a playbook that has been working very well for some time, creating opportunities for the region, for the businesses, and for Singapore.
All right, that was Janil there, talking about Singapore's new green data center roadmap, of course, just announced earlier this morning.
Big enough pie for everyone. Belle, thank you so much for that coverage. Janil Puthucheary, Singapore's Senior Minister of State, Ministry of Communications and Information. Of course, Annabelle Droulers helming that summit for us. And staying with Southeast Asia tech, Google says it will invest $2 billion in Malaysia, including building a data center in the state of Selangor. It says the investment will support over $3 billion in positive economic impact, creating almost 27,000 jobs by 2030. Google says it's to meet growing demand for cloud services and AI literacy programs. Well, still ahead, a new EV adoption policy in Delhi could threaten the growth of India's carbon-based energy suppliers. The managing director of Indraprastha Gas will be joining us for an exclusive interview. Keep it here with us. This is Bloomberg. Welcome back to Bloomberg Markets Asia. You're watching India Focus. India starts trading in just under 2 minutes, and one stock we're tracking is Tata Steel. Well, futures pointing to a lower open for that stock as profit fell 64%, and that's on the back of lower steel prices, one-time loss as well, surging steel imports hitting steel makers everywhere. Tata Steel under water at this point in time. Futures pointing a lower open of about 1.3%. We're also keeping an eye on Edelweiss shares dropping 16% in pre-market trade. That's on the back of the RBI imposing curbs on 2 Edelweiss companies. Well, staying with India, temperatures are continuing to soar across the country, with one observatory in the capital registering almost 53 degrees Celsius. Maximum temperatures varied from 45 to 49 degrees across parts of the city. The heat wave in India is posing serious health risks and sending peak electricity demand in the capital to an all-time high. Let's discuss that and more with our next guest, who runs India's largest city gas distributor by revenue. Indraprastha Gas MD Kamal Kishore Chariwal joins us exclusively from New Delhi. Kamal, good to have you with us. First off, that heat wave in India, what does it mean for demand for fuel, electricity, gas even?
Good morning to you and to your viewers. Yes, you're right that there's extreme heat wave, so the energy demand has gone up, as also the CNG, the fuels that are used in the vehicles because of the excessive air conditioning. So they are also seeing an uptick. But overall, the energy demand is very, very high due to the extreme weather conditions.
Can you quantify that for us, please? How much higher is demand?
I mean, in the overall energy terms, if you see the peak power demand, so that has increased by 10 to 12%, the peak demand. And if we see the vehicle, say for example, if I talk about the CNG demand, So that we are seeing that 4 to 5% increase is there, especially in Delhi area. But at the same time, the schools have been shut prematurely. So you can say that some of the demand that would have come through buses, so that has also been affected. So CNG, you can say, is a mixed bag kind of a thing where on the one hand, due to more air conditioning, the demand is there. But on the other hand, the schools have been prematurely shut due to the extreme heat wave.
Kamal, how is Indraprastha Gas responding to that increased demand?
I think the more and more gas-based generation capacities are coming on stream. So we are seeing that some of the plants which were not affordable in normal times, they have come on stream on gas, like some of the NTPC plants that have started taking gas. I mean, few months back they started, when the summer started, those units have started consuming gas. So in a sense, the overall gas demand in India, you can say, has increased by 10 to 12% due to the demand from the power sector.
Kamal, we know that India is making a transition to clean energy, and Delhi in particular will be converting its buses to electric. How might that impact you and your earnings?
Yes, actually, India has, as all of us are aware, that India has a commitment for 2070 net zero and 45% reduction in CO2 emissions by 2030. So as a proactive step, we always knew that the gas is a transition fuel, that from petrol, diesel, they will transition to gas and then to renewable sources. So that transition, we see that in Delhi playing out perfectly as per the books, that for last 25 years, we had this city transport running on CNG, and now they are converting to electric. Although we believe that electric has a long way to go, that in the sense that the electricity today is around 75 to 80% still gray to black, and only 20 to 25% is green. I mean, the electricity that is generated from renewable is only 20 to 25% of the overall mix. Balance is either coal-based or liquid fuel-based. So in that sense, it is only a shifting of the pollution.
At some point, though, that electrification efforts will hurt gas sales. What are you looking at? What are your own estimates?
You see, in Delhi, we have already started seeing the effect of that, in the sense that whatever growth we are having is getting negated by electrification, especially of the public transport systems. Like Delhi, we have seen a reduction of around 45 to 50% drop in CNG consumption by Delhi Transport Corporation, which was one of our biggest customers. And in the next 2 years, we see that demand going up. But although that overall demand in our mix is only 4%. So that 4% demand coming from the city gas distributors and the city bus of Delhi, the transport undertaking Delhi Transport Corporation, that will go away in two years' time. That is the timeline that they have given us.
Kamal, you talk about rising demand for natural gas. You have to secure those supplies. Any difficulties, any challenges in securing that, in the supply chain, for instance?
You see, when we pitch for CNG, we pitch it as a fuel which has got economic advantage as well as environmental advantage. Now, environmental is known to all, but the economic advantage can only be passed on if we have this fuel at a discount to the existing liquid fuels like petrol, diesel. So that way, the securing of supply is not the issue, but securing supplies at a price where we can pass on the economic benefit to the consumer, that is a challenge. So in that sense, we see that due to the elevated crude levels as well as Henry Hub levels, and the spot prices are also increasing. In between, they had come down to 8.5 levels. Again, they are at more than $12 per MMBTU levels. So that way, it's a challenge, not from the supply point of view, but from the pricing point of view.
given the assumptions you're making, Kamal, where do you see natural gas prices ending 2024?
So we see that, I think, slight softening of, so $10 to $12 is the range that we see prices remaining in the balanced part of the year.
And before we let you go, how are you diversifying your business? What's your growth strategy?
Now, one of the strategies towards securing the supply of the domestic gas, and one of the key steps is the bio-CBG plants that we are, India is setting up. India has set up a target of 5,000 CBG plants, and IGL is also making efforts to secure. So our target is that 10% of our supply should come from CBG in next 5 to 7 years' time. So you can say we are targeting close to 0.5 to 0.7 million gas coming through this route. I mean, on the one hand, what this will do is provide a sustainable source of supply, secured source of supply, because as of now, this is the cheapest source because it is available at the source. There is no transportation involved. The taxation advantages are there, and there is a capital subsidy. So there is an incentive or a push from the government also to set up CBG plants. And we are sure that that would be one key diversification area. Second would be the LNG space, where we see that medium and heavy commercial vehicle segment. So that can only be, I mean, when we look at the decarbonization journey, so that is the only, the option available in the heavy and medium commercial vehicles. So LNG and CBG would be the key, other than the expanding the core.
Kamal, thank you so much for that. Kamal Kishore Chadiwal, MD of Indraprastha Gas. It has been trading for about 7 minutes now. Let's do a check on Edelweiss stocks, in particular on the back of the RBI imposing curbs on 2 Edelweiss companies, and those are ECL Finance as well as Edelweiss Asset Reconstruction. On the back of that, we're seeing pressure on those stocks as well as its units named by the RBI. Plenty more ahead. Keep it here with us. This is Bloomberg. All right, let's take a look at the bond market in New Zealand as well as Australia. That's on the back of New Zealand's new centre-right government delivering on its election promise, and that's to cut taxes in its first budget, even as the Treasury forecasts bigger deficits and delayed return to the surplus. Of course, targets working families with tax relief worth 14.7 billion Kiwi dollars as well. And this is, of course, Finance Minister Nicola Willis's first budget. We have New Zealand delivering on its election promise to cut taxes. Take a look where we are in terms of U.S. assets as well. Of course, we had pretty much stocks and bonds under pressure yesterday on the back of expectations of those rate cuts coming in later than anticipated. Higher yields weighing on Asian stocks, weighing on the U.S. as well as we await that U.S. GDP report. S&P futures down about 0.5%. That is it from Bloomberg Markets Asia. Horizons Middle East and Africa is next. Keep it here with us. This is Bloomberg.